Hi, JJ here with The Art of Value. In investor Jeremy Grantham's latest article, Entering the Superbubble's Final Act, he talks about preparing for the epic finale of the Superbubble that he says we find ourselves in. Grantham says only a few market events are really important in an investor's career, and among the most important are superbubbles. Grantham thinks we're in the midst of a superbubble and it's now unwinding. As we'll see, one of the features of the unwinding of the bubble is a bear market rally, which we've just experienced. After that initial stage of the decline, then a bear market rally, and then another leg down. So he says that's about where we are now in the phases of a super bubble, with that final stage to go. So the big problem, as Grantham sees it, is that we have the most dangerous mix of factors in modern times. That is, the three big asset classes, housing, stocks, and bonds, are all way overvalued, at least they were at the end of last year and becoming less so. How does he know it's a super bubble? Well, he compares it to other super bubbles in history. That is 1929, an epic bubble, and 2000, the dot-com bubble, known as the dot-com or tech bubble, and 2021. He's also talked before elsewhere about Japan, the epic bubble, stock and housing bubble that they had, which burst, and it's been 30 years and they still haven't really recovered from that. Grantham says in the previous three cases, after the initial decline, the market rallied, bear market rally, to gain over half of its losses again, to lure investors back in, and then only to turn down a lot more again. He says that the market rally that we've just had, the bear market rally, fits the pattern perfectly. One thing Grantham says to remember about super bubbles is that historically they've always broken back to trend eventually. So the higher they go, the further they have to fall. So now Grantham says that fundamentals are deteriorating enormously, which means that the worst is probably yet to come. Every cycle is different, but he says it's very likely that the worst is yet to come, in his opinion. So at this point, if you're on YouTube, I'd like to ask you to hit that like button if you're getting value out of this episode. Thank you. Grantham's theory there are 4 stages to a super bubble, multiple stages. And the first is, of course, that the bubble forms. The second is that some setback occurs, like it did in the first half of this year, when investors realize that economic conditions perhaps aren't so good. Something happens, the war starts, for instance, inflation, and the market starts to take a step back. Third, he says, is what we've just seen, a bear market rally, and they can be big ones. And fourth is when fundamentals deteriorate and the market takes another big step down to its low. So to conclude, Grantham says that the next leg is likely to be driven by falling margins. And we've also had higher inflation and, of course, the rate shock, which is ongoing, and that will drive the market down to its low. So Grantham also says, to add to the pain, we've had a commodities and energies surge, which will cast a long shadow over growth. Given all these negative factors, he says it's not surprising that consumer and business confidence is currently testing new lows. And of course, in the tech sector, which is really the leader in the US and global economy, hiring is slowing, layoffs are rising, and CEOs are getting worried about a looming recession. So Grantham, to conclude, says that every cycle is different and every response by central bank and government is different. But he hopes that this super bubble unwinding won't be as bad as 1929 and as minor as 2000, which really didn't affect the economy too much, and it worked out okay over time. But the bubble needs to unwind, it will unwind, so it remains to be seen what will happen. I just want to reiterate that this is Jeremy Grantham's opinion, his view, not mine, and I do think he should be listened to, and he's a respected investor. He's a student of bubbles over history, which he says, so it's worth listening to. But as far as the macro events go, I look at micro events with the companies, how the companies are doing over time, and not the big macro events. I don't invest according to macro, but I do think it's good to know about it and good to know what's happening out there, especially in terms of inflation and interest rates and things like that. Nonetheless, really interesting. So I've made other videos about Jeremy Grantham's investing views. I'll put some links in the description, and also if you're on YouTube, there'll be a link at the end of the video. So if you got value out of this episode, please like and subscribe if you're on YouTube. And if you're elsewhere, follow, subscribe, whatever your podcast player allows you to do. And I'll see you next time.